Good afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a breakdown of the action in today's session. And it was a pretty decent day. We've been seeing a little bit of this trend where we'll fade and get some weakness into the close, but it looks like we held up pretty well today.
Yeah, it wasn't looking so good around mid-afternoon, but strengthened near the end. We have some stocks that cleared buy points today: Expedia, Deere, and Anthem.
All right, we'll take a look at those. But first, let's check in on the major indexes. So here's a look at the NASDAQ Composite, finishing the day with a gain of about 1.3%. We also had the Dow Jones Industrial Average up 1.1%, the S&P 500 up about 0.8%, and the Russell 2000 up about 1.5%. So it looks like we've been trading in kind of the same range roughly for the last couple of days here. But again, this chart a little delayed, so a bit of a boost into the close. Looks like that 21-day line is the next hurdle.
The next hurdle, and then I think just for all the indexes, you got to get above last Wednesday's highs. I think that would be the Dow is a little closer than that than some of the others, but so the NASDAQ has a lot of resistance areas. The Dow is getting right up around there, basically closed right at the 50-day line. So getting above these levels is important, I think, because it's hard to take a whole lot. I mean, it's hard. It's hard. You watch stocks go up, but you realize we're just sort of trading in a fairly narrow range right now. So there are some stocks that are leading, that are outperforming, and that are making moves, and we're going to take a look at some of them. But I think in general, you just have to be cautious here because we could run up to last week's highs and reverse lower pretty easily. Like right there, you can imagine that's coming up. The 50-day line's right around that area, and it just gets knocked down. Now, maybe we power on, but just be cautious, I think, in this environment until we really, really show that we're clearly in an uptrend.
Right. And you mentioned more stocks breaking out, but are they the same kind of leaders that we typically see after the type of correction that we just had?
Yeah, I don't know. We certainly don't have a lot of growth stocks, that's for sure. There's solid stocks, and there's nothing wrong with them. It's just that we're looking normally for these chip and software and internet leaders, and there's a few techs that are sort of there, and I suppose there's a bunch of other growth stocks that are setting up to set up, but they haven't quite done it. And even then, it's not that many of those. So if you're going to play this market, if you only want to play growth stocks, well, this is not the right market. If you want to try to do some other ones, you might be able to nibble on some, but it's still, I think, an environment to be cautious in.
Yeah, we've been focusing on some of those lower PE stocks, something we don't typically do. But let's take a look at the 10-year Treasury yield. So higher again today after a breakout last week.
Yeah, and this is one reason why we've been looking at lower PE stocks, because you discount future growth based on interest rates. Well, rising interest rates make those high PE stocks seem less attractive. Hit another 2-year high. I mean, it closed off highs, but for goodness sakes, that's been a pretty big run in the last few days. Obviously, the last few weeks, it's sort of impressive how the market, especially the NASDAQ, has weathered the past few days. I guess the only thing, and so that's definitely positive. The only thing I would caution on that is sometimes the market will take bad news or seemingly bad news in stride until it doesn't. And all of a sudden, it's just sort of like, you've reached my breaking point, and then it breaks. So we'll have to see how that does going forward. Definitely, we're very much focusing on the 10-year yield.
Yeah. So thanks for that overview of the key technical levels to watch across these index charts, an update on the 10-year yields as well. And let's talk about some setups and breakouts now. So Expedia has earnings in 2 days, but otherwise a compelling actionable trade idea today, up about 3.5% in the regular session, clearing resistance right around that 190 level, Ed. And we can also take a look at the weekly chart. Expedia has been going sideways for quite a while now, but it seems like this is a potential earnings option play.
Yeah, and we may put it on leaderboard today as an options play because it's pretty risky to be buying it right into earnings. It's got a long consolidation. I mean, it has a recent consolidation, but yeah, as you say, it's basically been consolidating for the past 10 months. Really, I mean, it seems obviously coronavirus has had such a huge impact here. And now with the cases coming down, and I made this argument a few months ago, and then they fizzled again, partly because of Omicron. So, another variant comes up, here we go. But it feels like maybe you'll finally see travel take off. There's a lot of reasons to. You can see that growth rate for 2022. It already returned to growth last year. It's supposed to get to record levels this year. So those are positives for Expedia. And a lot of hotels are either breaking out or coming up, flashing buy signals as well. So there's definitely momentum in this sector. We'll see if it's a little too early, premature, or overwrought, because we're going to get earnings soon.
Yeah.
But definitely something to be watching for here.
Yeah, that earnings report could be very telling for the sector as a whole, and what we could see in terms of the recovery there, not only in the numbers from the most recent quarter, but the guidance as well. And who knows, there could be some other names in the group moving in sympathy either which way with Expedia, but an interesting technical picture here heading into that report. And let's also take a look at Deere perking back up. Strong way to start the week with a gain of about 4.7% today, clearing multiple entries, a couple ways you can slice it, and some nice volume behind the move today too, Ed.
Yeah, it really was. And I think a lot of that came in late. I'm not sure, but it's like we had the downward sloping trend line, and it was added to swing trader somewhere along there, or maybe off the short-term high right there. And then late in the day, after earlier flirting, it came on. As the markets came on, Deere came on. And this was our stock of the day. And I would definitely encourage people to read this, because Jed Graham was talking about, obviously, the agricultural sector, fertilizer, and a lot of those plays did well. There's another farm machinery stock that had earnings today that isn't doing as well, but had a really strong earnings. So that seemed to Agco. So again, like Expedia, this is a sector that's doing reasonably well. So definitely one to be paying attention to.
Yeah, and we have a little bit more time before earnings with this one. So if it can keep up the momentum, theoretically, that's enough time to build enough of a profit cushion with the report due in 10 days' time.
Yeah, definitely something to watch. Maybe you do it as a short-term play, or maybe you get enough cushion, or maybe you just wait.
That's true. Nothing wrong with that. Couple ways you could handle that trade. And now let's take a look at Anthem. A couple different levels that it cleared today too, making it actionable. Had earnings a couple weeks ago, but definitely one that has that checks off a lot of the boxes that we like to see.
And something that you were noting, I think, on Expedia and all of them, the relative strength line looks strong. Hitting a new high. It's been trending up. It's sort of a base on base formation, a rebound today off the 50-day line or 21-day line and the 10-week line, and then the 461 level, kind of area. So it broke through there. Volume was above average. There's been a few decent volume gains recently. They're still below the original buy points, not too far from that, but definitely you could have played this today. It was added to leaderboard on this. And again, another one, Centene, one of its rivals had strong earnings today, CNC. So this one flew up. Came right up to it and actually did end up breaking out just barely. For most of the day, it was just below the buy point, and it felt like just a little bit below where you might want to play it, because it was getting extended from the 50-day line, but not quite at this key level. So that's also doing well. United Health is doing well. So this whole area is strong. Again, looking at groups, if you're going to be looking, it's like there's not many stocks doing well. So it's nice to find stocks that at least their sectors are doing well. And as Anthem already had strong earnings, its peers have strong earnings. This is a pretty solid sector. It may not scream, it may not triple on you, but it's a pretty decent group right now. It's probably going to go up the rankings with the kind of gains we saw from some of those names today.
Definitely. And we often talk about scaling into positions. So maybe investors initiated a half position here today, which we typically, as our guideposts, it's probably about maybe a 5% position. Then would you add to it if it breaks out of that 470 level?
I think that's a good way to play it, especially with the market way it is. It's sort of like, it's an early entry for the stock and sort of the market in a way. So yeah, I think that would be a way to go, especially if, say, in this case, like the S&P gets through its 50-day line or gets above those things, it makes a sense that there's more momentum in the market. Whatever you do, if you do go into things, definitely be ready to scale out. I mean, that's always the case. You need to be ready. But I think with the market environment, the market could turn on you. And if you have a bunch of positions and you're fully invested, all of a sudden it gets very difficult to get out. So I would keep the exposure relatively light
Mhm.
and be ready to get out.
Yeah, stay nimble. It's been a tricky market, and as this new rally tries to find its footing and continue higher, there's been some bumps along the way, and there could be more. So we'll keep that in mind. Thank you, Ed, for all your guidance and sharp analysis there, and thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live and a couple of other announcements for you. On Friday's show, we're going to have Charles Harris, portfolio manager at O'Neill Global Advisors, VP into SVP there as well. Always great to have him on the show. And then later in the day, Justin Nielsen and I are going to be on Barron's Live talking about strategies for getting back into a market after sidestepping a correction in a measured approach, of course. And then coming up on February 16th, we have a webinar with David Saito Chung and Ken Shreve that's all about short selling. So there are a couple of things for you to put on your calendar there. And thanks again, Ed, and to everyone watching. We'll see you back here tomorrow.